Apologies about that. Sorry, there's all sorts of problems here. It's just one of those days. Hopefully you can hear me. I hate to ask, but hopefully you can. If someone could just say, yep, thank you, Rob. Thank you. Sorry about that. Appreciate it. Right, thank you. Great. Right, where's it go? Let's have a whiz round, see what's going on. Right, this is, just pull this over. This is on the VIX. This is the VIX down to the day. So I've got the 1 minute, 5, 10 across the top and 15, 30 and the daily down the bottom here. This is the general trend for the VIX. It's currently ticking down. Trend monitor is bearish and we're trading around a quite tight range at the moment, up and down. Not a great surprise given we're coming to the end of the session and the session volumes are also down. Let me just start with, let's just go hop over to gold and then we'll come back onto the indices. I mentioned that before. There we go. Anna was talking about slower time frames, and there's been this terrific trend on gold, which has been in play today. And if I just pop this up full size, this was a post we did on, where are we now? Thursday, I'm losing track of the days, Tuesday or Monday maybe, three days ago. And this is the weekly chart for gold. I know a lot of traders follow Anna's post and they follow the analysis, and you know, I'm not saying they take the trades, but that's what they follow. This was a classic anomaly. But it only showed itself by going down to the slower time frame. The weekly chart is maybe one you never look at. I would urge you to. For those of you in the chat room, you'll probably almost certainly be familiar with Nick, who gives very freely of his time to students in the room, and he also does some great analysis at the weekends. And what you'll find there is he will spend time looking at the charts across the time frames. This is the weekly chart, and the anomaly here just jumps off the page. And the anomaly is this candle. You can head over to Anna's site and take a look at the post. I might have it up here. Yeah, I have actually got it here. That was the post we did. I'm really just explaining all these candles. But the key one is this one, because the volume anomaly is so extreme. And basically, to cut a long story short, what we said was, from that perspective, this is a trap move with bells on, if you like. This market is not going up, this market's going to go up. And the levels we put on, we said a move through 1700 is what we're looking for. And once we get a move through 1700, then we're looking for a decent trend higher to break away from this volatility range. And we're now trading up through this low volume on the volume point of control. And that's the reason that that became so clear. So I would urge you to consider, even if you're an intraday trader, you should be looking at the daily charts and go and look at the weekly charts, particularly where you've had a lot of volatility. It smooths that volatility out, it puts the volume in perspective, and it gives you a much clearer picture of where the levels are, where the volume point of control is, what you've got in the volume histogram, and the general volume price relationship, to give you a heads up as to where those like to be heading. And this is the trade that we've seen on gold. It's just very steady. Trend monitor is solid, right the way through the piece from one end to the other, and just very, very simple VPA lessons. You can see the break here, nice high volume, nice widespread up candle, little bit of retracement, a little bit of a move lower, but not great selling in there, and on up we go. That's what we're looking for the whole time, breaking away from the volume point of control on 15 and on upwards. It's just been a terrific move. Go back onto the indices themselves. Go to fast and daily. There we go. This is the three. We've got the YM, the NQ. Excuse me for a moment. Sorry, don't want to hear me coughing. And over on the right, we've got the ES. So we've got the Dow Jones, the NQ, and we've got NASDAQ, and we've got the S&P 500. Down the bottom here, we've got the dailies. The thing that is worrying us, and we've written about it as well, was this candle here. This was Tuesday's effort to rise. A lot of volume going into that particular candle. We're still carrying on up, but the spreads, particularly on the NASDAQ at any rate, it's getting a little bit narrow. The spreads are narrowing. Now, part of that is obviously the fact that we are coming towards a holiday period. So naturally, you would expect the volumes to decline as a result of seasonality, because a lot of traders will be stepping away and the volumes will naturally decline anyway. But certainly from a technical analysis perspective, just heading on to the daily again, This was the weakness we saw. It's not been reflected yet. Certainly, I'm keeping an eye on what the VIX is doing. The VIX is still tracking down. It's sort of breaking away from that congestion phase now. In fact, I'll just pull it over. This is on the faster time frames, bear in mind. It's on the 1 minute, starting to break away a little bit here, starting to break away there a little bit, and also over here on up to the 10 minute. And if you're trading any market, doesn't matter whether it's Forex or whether it's indices or whether it's commodities, you should have the VIX up, because the VIX is a heads up to sentiment. It represents the balance of calls and puts, and it gives you an idea of what is going on. It's not just a sentiment indicator for investors. Intraday, it gives you a heads up as to what the sentiment is, whether you're trading a 1 minute chart or a 1 hour chart. So I would urge you to have the VIX up somewhere. Let's just go on to the multiple Rencos. In fact, let's go to, where are we? Indices and multiple time frames. There we go. This is probably easier. I've got the 15-second up here. As Anna said, I tend to use these quite a lot, certainly 15-second and 30-second. Some of you may be horrified, I know, but it's what I like to use personally. You have to find what your comfort level is. Some people would never, some traders would never use this sort of time frame, but 15, 30-second is something I use a lot, because what it gives me personally, it gives me a heads up as to what's coming up at me in terms of a 2 minute or a 5 minute. I don't find it throws me in terms of what it's telling me. I just find it a helpful and very useful. And all I would say, even if you're not going to use it as a trading time frame, and you've got NinjaTrader or you've got a chart that gives you that sort of time horizon, a 1 minute's fine, but a 15-second will really make it quick and snappy in terms of your analysis. You'll get very quick at doing volume analysis on the fly. And it'll just make you that much more alive to what is going on at the live edge of the market, rather than having to take your time and analyze it all the while. It will just make you that much quicker. Just want to change these over because I've got these set to, so let me just change this. Let's just change this to 10 minute. There we go, put that down there. And that's YM, got all YM, got NQ here. So I'll just change these over as well. So they're all the same. 20, there we go. That's that one. And I'll change this one over as well. I was doing something else this morning. There we go, so on the YM, so that's 10, move this up to 15. There we go, and now we've got the complete array. So we've got a pretty good idea of what's going on. As you can see, the volume point of control is pretty much in evidence across the piece. It's what's going on the VIX. It's what you expect to see. Personally, at this time of night, and given normally at this time of night, I would be happily trading away through to the close. On days like this, certainly at this sort of time, late in the session, with a holiday ahead, I wouldn't be. I wouldn't be in the market. It's just not worth it, because I don't think there's enough volume. There may well be a move developed, but as far as I'm concerned, I'm expecting congestion. That's what I'm seeing on the chart right now, is what I'm expecting to see. It may change. There may be a sudden piece of news comes out, someone announces something, and so on and so forth. But at the moment, we're in pure congestion phase. We've got volume point of control in evidence on the 15-second, on the 2 minute. We're trading at it on the 5 minute, and on the 15 as well, on the 10 and on the 15. So really, it's only telling you one thing. You've just got to be patient and wait. We've had the big moves. The Fed are just printing money like, well, I'm trying to think of an analogy, but it's really coming out like it was going out of fashion. They are just going to carry on printing money. The employment numbers are appalling, and you might wonder why the markets are actually increasing, because it actually raises the... Yes, exactly. The Fed's got their back. And it does also highlight this issue of, which I know a lot of traders struggle with, and it's something we focus on in the program as well, is about this business of trading with an opinion. Your logic, your common sense would suggest that, given the turmoil that is going on now and likely to continue for a long time, and either depression or recession in a big way, you would find it hard to understand why equity markets are doing what they're doing right now. So your logic, if you will, your emotional response would be, well, you know, I've got to trade short because the market they must fall. And you have to set that to one side. It's the anomaly of markets rising on bad news and falling on good news. And you have to get your head around that and really just trade what you see on the chart and forget about what your personal opinion is or what you think should happen. It's hard at the moment because we are absolutely blitzed with bad news headlines. So it's hard to imagine markets that, you know, are going to rally far at any rate. So it's just a question of trading as you see it and not as you think with an opinion, which is the most dangerous of all. Let's just go back onto gold. Oil isn't doing a great deal at the moment. Gold is the one that's moving. There we go. We're carrying on up. Just a perfect move. Really, really, really nice move. You know, it's not scary. This is on 3 minutes. Just have a look at that from a VPA perspective. You know, nice little move down here. We get a little bit of selling coming under this candle. And then what do we get? We get higher volume and we get a third of the spread in price. What does that tell you? It tells you the buyers are still in control because they've come in and bought the market at that point. The market is not going to fall further. Why? Because if it was, then this candle with this volume should be down here somewhere, and it isn't. It's up here. It's a narrow spread, so there's buying in there. Equally, when you see these two candles coming in a similar way to I was showing you on the daily chart for the indices, when you see these coming in, that's a signal of weakness. Yes, the market carried on, but then it rolled. It's a different time frame, but the principles are exactly the same. So if you're in a long position here and you see this coming in, you've got a decision to make. Do I hold? Do I close? Do I part close? What do I do? Because I can see weakness on the horizon. You see that if you closed out or you part closed, you see the weakness arrive. You see the buying coming in under this candle, and you think, okay, this looks as though it's going to continue, and it does. Little bit of a pause, again, low volume under that one. And then what do we get? We get a nice injection of volume on the next candle, so that's pretty comfortable. And the next one's gone up too. Maybe a bit too much volume on this one because you've got a wick on the top here, which you may not be able to see. It's about that height there. So there's a little bit of selling gone in there, but that's no great surprise because whenever the market ramps up, then people are going to be selling out into it, taking their profits off the table and so on and so forth. The other point about this chart is the trend monitor, because when you get to these phases, the trend monitor keeps you in. And if you have it running with the trend dots, I'll go over onto the Renkos in a minute, and it's just the perfect combination. The trend dots work close to the market. The trend monitor takes a more considered view, so it hasn't changed here in terms of that minor reversal and pullback. Because the hardest thing to do in trading is to stay in a position. We get so many emails about it. I know traders in the chat room have an issue with it. It's, you know, you've made some profit, you're happy, you're delighted, and then the market starts to pull back and you've mentally banked that money, and then it starts to pull back against you and you close out inferior because you don't want to lose what you've got. And then of course the market reverses a little bit and then it carries on higher. And again, it's one of the most important applications of volume price analysis, this whole business of identifying what is a primary trend and whether a reversal against that primary trend is a reversal to a primary trend in the opposite direction, or whether it is simply a secondary trend, in other words, a minor pullback and reversal. And that's the power of volume price analysis, because it reveals that for you and it stops you making that emotional get out decision that is triggered automatically. And it's quite interesting at the moment, which completely off a tangent, which has just popped into my head. But because of the situation we are now in, I have turned into hunter-gatherer because that's my natural instinct. My natural instinct is now to protect my family, to go out, hunt, kill, you know, not in fact, but, you know, the principle is that I'm now constantly on, you know, the food sites. I'm looking for where we're going to source stuff from, etc., etc. I have become a hunter-gatherer. That's how deeply the DNA is ingrained in us, and it's just a curious anomaly that you see it. You know, it comes out in this way, and these are the issues you have to deal with in trading as well. I know it sounds strange, but that's a fact. It's very curious at the moment. Sorry, I went off a complete tangent there, but it's interesting to say the least. This is a lovely, and in fact, let's stick with this. This is just such a nice trend to follow higher. This is very comfortable money. And what this also leads on to is the question that Anna was alluding to earlier on, which I think was an email from someone who said, well, is it easier to trade single instrument, gold, oil, index, whatever, because you haven't got to worry about the fact that you're trading two currencies or two economies. And in a sense, that's true, but the issue is really broader than that, because whilst technical analysis, fundamental analysis, relational analysis applies to a chart, whatever it is, the problem is if you set yourself up as a gold trader or an oil trader and that market isn't moving, boredom sets in. I know a lot of traders who say, well, I only trade oil, and that's fine, when oil is moving, but when oil is not moving, what are you going to trade? So that's the issue. It's, in a sense, yes, it is more straightforward, if you like, because you're only trading one instrument. All you've got to worry about is gold, you've got to worry about the dollar, and so on and so forth. In terms of currencies, you are spoiled for choice. There is always something to trade, assuming you're not limiting yourself to a number of currency pairs. Sorry, Dang? What yes, yeah. I mean, it's an easier market to get into. You can get into it on MT5. You don't have to have a futures account, obviously. We'll just stay with this for a moment. Let's just pop one of these up. It's 5 minutes. Pull that up a little bit wider. Nice move up here. Nice spread on the candle. No wicks, so that's fine. Got some more volume going in here. Narrower spread, so a little bit of weakness coming into this now. But again, that's probably going to be profit taking. Ideally, what you want to see on that volume compared to this volume, you want to see this candle maybe a little bit higher. So there's a bit of selling gone on in there. And of course, what you'd also be looking at in this scenario is you'd want to know what's going on in the dollar. So let's have a quick look at see what's going on in the dollar. Currency indices, where are we? There we go. Wait for them to load up. There we go. Okay, this is the yen, this is the dollar, this is the euro, and this is the pound. And as far as the dollar is concerned, it's been in congestion and now it's moving lower. You can see it over here. This is on 15. We've had this big sell. It's very oversold, so it may well start to kick up. But certainly, as far as gold is concerned, that is certainly helping to push that commodity higher. Let's go back to it and find it. So there we are. That's what's happening on. You certainly have the dollar up on another screen. Find out what's going on. So yeah, a little bit of weakness here. So when you get this this minor pullback that looks maybe developing, just pop that back up again. You probably can't see the wick, but it goes up to here. So it's a $3 per ounce wick here. So there's a little bit of weakness coming in. I'll just put the volume on as well. Where are we? There we go. I'll change that to on tick. There we go. Apply that. I'll pull the volume in. There we go. So that's what we're seeing on that particular candle. This builds in real time then, rather than having to building at the bar close for those of you on NinjaTrader. So what we're seeing is a classic sign of some weakness building, wick to the upper body. This is on 5 minutes. So assuming this closes off in the next couple of minutes or so in that shape, and it looks as though it may do, then we've got a lot of volume going in and we've got a little bit of weakness coming up. So, it looks as though it's possibly going to reverse off that position in the short term. Does that mean the trend is coming to an end? Not necessarily. It just means we're seeing some short-term weakness develop. And if you're trading that on an intraday on these fast charts, then that might be an opportunity to close out. We step down onto the 3-minute chart. What have we got? Lay one over the other, and you've got a 2-bar reversal. So if you looked at the 6-minute chart now, you'd have a perfect 2-bar reversal with quite a decent amount of volume driven in there. So for a fact the market's going to reverse. And that's what volume price analysis does for you. It gives you the confidence to know what's going to happen next with a pretty good degree of certainty. But what it also does is it means you're making decisions based on analysis. You're not making decisions based on gut or instinct or fear, on emotion, in other words. You're basing it on logic, common sense, and analysis. And it stops you making that emotional decision to get into a trade or get out of a trade based on a gut. And getting into a trade, the classic trap with getting into a trade is using volatility, because with volatility, the market's moving very fast, your initial reaction, and it's a bit like what I was saying about me being a hunter-gatherer right now. Your natural instinct is if you see a prey that's moving fast and you haven't eaten for a while, you're gonna have a pop at it. That's it. I've got to get it. I've got to get it. You don't wait for something that's an easier target, perhaps something that's a bit slower. You've got to get that one. That's what you've got to kill. And that's the emotional reaction that is triggered all the time with and that's why the volatility indicator is so powerful, because it highlights that for you, and it just gives you that signal. Hang on a minute, just wait. If you're in a trade, you've got a decision to make, but if you're not in, don't jump in. You just got to wait and be patient for that for the price action to move away. We'll come back to that in a minute. Let's just go back onto the indices again. See what the three of them are up to. Not a huge amount. That's on 5. This is the YM we're on now. There we go. And it's just it's a really nice congestion phase building. It's been building since, where are we? 3 o'clock here. Volume point of control, absolutely solid. This is a very strong area of. It's acting as support at the moment. Price action keeps dipping down and sitting above it, dipping down, sitting above. So it's testing the whole time. So it's holding it up there for the time being. And this would just be a classic example of waiting and being patient. Where are we trading? 850. You'd be looking for a move through, certainly above the top here, probably about 900. If you go through 900 on decent volume, then you'd be looking to jump in at that point possibly and take a long position as the market breaks away, but assuming it breaks away on decent volume. And again, you can see the trend monitor, it's transitioned through to blue. Then we had a pause. It went into a darker color. Is this trend breaking or not? Now we're back into bright blue again. It's remaining bearish. The VIX is sort of ticking down a little bit. It's ticked down a few points. Let's pull that over. There we go. So it's kind of ticking down here. You can see it ticking down here, ticking down on 10. But it's really, that's the move on the day. It's trying to rally a little bit, and obviously as this goes up, then markets go down and vice versa. So that's where we are. It's very, very tight at the moment. It's what you expect on a day like this, and certainly at this particular time. So even if this broke up here, I wouldn't be interested in taking a trade right now. But that's a personal decision, obviously. You have to decide what your tolerance is, your risk tolerance. Going back onto the daily NQ, which we picked up on earlier on, this is where we are. That's what I don't like. It'll be interesting to see whether any of these levels come into play. But the fact the spreads are narrowing, we'll see what happens over the weekend. And into Monday, early part next week. Obviously, the news hopefully will get a little bit better, maybe, but we will see. Just go to the Renkos in multiple time frames, if I can find them. There we go. These are moving sideways at the moment, as you would expect. They're just reflecting. These are pretty quick. This is 15 second, this is 30 second, and this is 1 minute. All in congestion. But when you get the decent trends running on the Renko, pop this up full size, you can see the way that is. As I said, the trend dots, they work very close to the Renko. They change first, and the trend monitor changes second. So they're just a great way to use the two indicators on the non-time-based chart. And what I like to have is something like this, where you've got 3 Renkos running. It's all about multiple time frames, whether you have it on the indices, whether you have it on time frames, whether you have it on non-time-based charts, the principles are exactly the same. Just go back onto gold again. Let's go and see what's oil. Initially there was supposed to be a meeting on Monday. Then there was supposed to be, that was a virtual meeting. Then there was supposed to be a meeting today to agree further cuts, or agree cuts at any rate. Whether that's been and gone, I'm not sure. Or whether it's been deferred again. There's a lot of politics surrounding oil, as you would expect. And if you're going to trade oil, then you really do need to understand the politics. Just go back onto the gold chart again. There we go. Okay, so we have that little bit of weakness. It's gone to the 3. Little bit of weakness there, a little bit of a pause point. Still remaining bullish though. Okay, we've got another little bit of a, let me just pull that out a little bit. There we go. Now what we've got is another sign of weakness. So we've had the 2-bar reversal here on good volume. So that's on the 6-minute. We've had a little bit of buying coming in as a support, but then we've had another volume weakness bar come in. This has got a wick to it, about the same size as the other one. So it goes up to here. A lot of volume coming in. That is not a sign of weakness. That's not a sign of strength, rather, that is a sign of weakness. So what we're expecting is the market to reverse off that particular candle. And if we go up to the 5-minute, it's pretty clear there. We've got effort to rise, falling back, effort to rise, falling back. So you've got one confirming the other. You know, that's a strong signal now of weakness to come. If I was trading that alongside, I would definitely be closing out now, taking my profit off the table and waiting for the market to develop. If this is going to develop into a full-blown reversal, much will depend on how this candle develops and the next one after it in terms of rising volume or falling volume, and you then have a decision to make. But the fact you are even aware that the market is going to fall back or at least weaken just gives you that confidence to either stay in or reduce your position holding or take it off the table completely. I'll just put the indicator on there so it loads in real time rather than at the bar end. There we go. Change that. There we go. Apply that. Okay, I'll build in real time now. Yeah. Let's just see how the volume comes in on that one. Let's keep an eye on that. And up onto the 10-minute, and all that's reflected there. So we've got this tiny little candle up here, a little doji candle on the 10-minute, lots of volume going in. So certainly some weakness developing for gold, which is hitting the highs, intraday highs, coming off the intraday highs now. And again, given that we're moving into a holiday period, given that we're coming towards the end of this particular session, no great surprise to see a lot of the big operators will be closing out, taking profit, had a fantastic day, made a ton of money, and just closing out their positions. Just go on to the currencies. Woof, where's that come from? Wow. Classic example of what I was just saying. This is on 15-second albeit, but you know, the principle is identical. This is on the Aussie dollar. Absolute monster move on Aussie. Let's move that out of the way. There we are. Well, I'll say a monster move. It's where are we? 22. Yeah, fair number of points, fair number of pips there. And this is what I meant by the volatility indicator. And the emotional response that you will have to that is to jump in and to make some quick bucks. And it's the worst decision possible because it plays on the fear of missing out, FOMO. Because when you see a fast moving target, then your initial DNA reaction is jump in and go for the kill. And you will be flayed alive. And that's what happens. Bang, up it goes. Traders will have jumped into that. Bang, now it's going to come off. Now it's either going to go into congestion or it's going to go into a full-blown reversal, depending on how we break from the volume point of control here. We've got low volume below, so if it breaks through this region, then it's probably going to go through that fairly quickly because we've got pretty low volume here. Not as low as it could be, but you know, it's certainly a lot lighter than over here. Bear in mind, this is a 15-second chart. Principles are exactly the same. In terms of where it's likely to head to, probably back down here because these are very, very strong support levels. You probably can't see it, but this has got a 9 against it, as has this. So this has been tested and held 9 times, as has this level. But in addition to that, effectively, you've got 18 level of cluster here with these two clustering together. So that's an extremely strong platform of support if the market gets back down there. But for the time being, all the traders who jumped in here will now be regretting that decision. They'll now be thinking that perhaps that wasn't quite the right thing to do. They've either been stopped out with the reversal or they're now getting squeezed emotionally into the I don't know what to do next scenario because I'm not sure where this is going next, and they'll either close out or they'll hope for better days. What they'll probably be doing now is moving up and down the time frames to see if there's any confirmation that the decision they've made is actually right, and they'll probably go all the way down to goodness knows where, 15-minute, maybe even a 30-minute, or over the daily. Am I right? Am I wrong? And should I stay in or should I close out? What am I going to do? Panic, panic, panic. Oops. Yeah, absolutely. Sorry, I've lost the chart for a minute. Where's it gone? There we go. Sorry about that. I meant to pop it up full size. There we go. That's the 3-minute, exactly the same. Bang, volume comes in. Market makers, big operators are playing in here. Let's make a big trap move. We're coming to the end of the session. Let's make some money before the holiday season starts. And it's as easy peasy as that. Pass back to Anna.